Yo, what's going on, guys? Welcome back to Trading from Scratch, guys. So, in today's video, we're going to be going over highs and lows. And, guys, look at this banger trade. Like, guys, this is what I'm saying. Like, follow this series, follow this course, and you guys are going to be hitting trades like this. I hit this morning, guys. Like, quick low 5-minute EQ, right? Tapped into it, reversal. You know what I'm saying? I ain't going to say too much. We gonna learn about how to hit trades like this. All right, y'all. But let's get straight into the video. All right, guys. So when you have a candlestick, and we're kind of just using a doji as an example here, this is going to be something we call wicks, right? This is kind of a continuation off of yesterday's video because we just went over candlesticks themselves. But, as you guys see here, there is these lines coming from these candlesticks, and these are called wicks, okay? Very, very simple. The lines connected to the candles are called wicks. You guys can write that down if you guys want to take notes on that. And we're going to be learning how to identify highs and lows. Highs and lows are very important within the market because they can give you some insight on certain things to mark out and just understanding where we potentially want to go with price action, and that is called liquidity. We will get into that later in the future, but we're just going to look at how to identify these highs and lows. All right, guys, so we are looking at a high and a low, but I'm going to show you guys how to identify it. So we have these two candles right here, guys, okay? These two candles. And then we have these two candles down here. I'm not an artist, bear with me, okay? So we have a high and a low. What really makes us know that this is a high and that this is a low? Let's just start with the high. So if I draw it out right here, a high is when we have a move up and a move down. That creates a high. A low is when we have a move down, then a move up. That creates a low. So the lowest point is why we call it a low. This highest point is why we call it a high. So identifying this is very easy. Assuming your chart is like mine and you have the green candles as the bullish candles and the red candles as the bearish candles, which just means that bullish means we're going up, bearish means we're going down. Okay? Or at least bullish means that it's a green candle, bearish means that it's red. Okay, I'll actually type that out for you guys. So simplifying it like this, bullish candles are going up and they're usually green. Bearish candles are going down and they're red. Now, I simplify this because you guys are beginners. So I don't need any advanced people coming in here saying, that's not how you explain it. Da, 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 da. I'm explaining it to someone who is just starting, right? Even I got a little bit of criticism for how I was explaining the dojis in yesterday's video, but it's like, obviously, we can use dojis for draws and liquidity, but if we're just talking about someone who doesn't know where price wants to go, they're not going to know just off of this candle where we want to go. But obviously, understanding market structure as a whole and connecting the dots, you can see deeper into what's really going on. But I digress, okay? So you have this up down that creates a high, a down up that creates a low. And then that is pretty much it, guys. So understand that you use the wicks on these candles to identify what's a high and a low. So that's pretty much it. Let's go for another example here. Okay. We take it back over here. We can see this created a high. These two candles. Why? Well, guys, because we have a move up and a move down. All right. Now let's look for a low. Oh, boom. Right in front of our faces. We have a move down, then a move up. Okay. And the reason why understanding and identifying highs and lows are super important within the market is because you have to be able to know how to properly mark out certain confluences in the future when we get more advanced. If you don't know how to identify a high and a low, and I told you to mark out something like equilibrium, and you're marking out from here to here, well, it's because you don't understand highs and lows. If I said mark out the next high and low from this point on, you should be able to mark it out like this, right? Understanding that this is the high. What's the nearest low? This. Down, up, down. See, very simple. So, and we'll get into confluences like equilibrium in the future, but I just want to show and tell you guys why it's important that we learn how to identify this. This is not for nothing. This is not for fun. This is very important. And yes, you guys can see in examples like this right here, sometimes we have a candle without a wick going up, and we don't really rely off of those for marking out confluences. Like if this had a move up right here, I would still mark that higher candle basically saying this was green, I'd mark this out for EQ. I wouldn't mark out this because there's no wick. Okay, so you have to understand that wicks are important for us identifying the highs and lows within the market. And all in all, that's pretty much what they are. Okay, guys. So, quick little video today, but I'll show you guys at least 3 more examples before we close. So, let's go over here. Let's practice. Let's take this back over here. Okay, where is the high in this image? It's going to be, guys, yes, this up and down that created the high. Where is the nearest low in this image? Down, up. Okay. Very simple. It's like a language. Understand that trading is like its own language. The market makes a lot of sense once we continue to put the pieces together. So let's just take it one day at a time and understand that these will all make sense in context, right? Up, down, down, up. So if we had to mark out the exact highest point and lowest point, that would be right here and right here, right? Because we have a down and up, but this is the lowest point, so that's the low. And as you guys can see, not to spoil too much, you can see the lows tend to have some sort of, not to spoil liquidity for you guys, but just showing you guys how it all works together. Look at this, a low from all the way over here. What did price do? You know, this should get you guys excited, understanding how these all connect together and how the market is truly like a gravitational pull, bouncing and reacting off of each other. And that's truly what liquidity is. Once again, this video is not about that, but we'll get into that eventually. But that's pretty much highs and lows within the market. I hope you guys enjoyed today's video, and I hope you guys are willing to catch trades like I did today, right? I hope you guys continue to watch these videos and become better and better at trading, understanding how market works. And eventually, guys, don't worry, we're going to tap into everything. We're going to tap into all these confirmations, all the different types of market structures, and, you know, even how to scale on prop firms to eventually make $10,000, you know, your first 10K month for a lot of you guys. And that's truly the goal. I want to make sure that you guys can become successful in trading. And that's what this series is all about. So guys, I hope you guys enjoyed episode 4 of Trading from Scratch, and I'll catch you guys in the next one. Have a blessed day. Peace.